Welcome. If you're tired of trading signal or not knowing how to prepare your trading week, I'm going to share with you my institutional process to prepare my trading week. And first, we're going to talk about the fundamental. And then, of course, we're going to talk about the technical part and everything. So, this is my weekly preparation for fundamental. First of all, I'm reading what we call the weekly recap to better understand what happened the previous week and what the preview for, let's say, the next FOMC meeting, the next inflation data, or whatever. And I do it for everything because it can just allow me to better understand what impact the forex market, the indices, the stock, bonds, commodities, and whatever. Okay, I have the performance of both of them. Then I'm also checking some important data and information. On the right, you can see the 10-year yield in the US. So you can check the percentage over there. The current is 4.70, right? So I have the performance summary over there for the US yield for the 10-year one, right? For the bond market, you have the performance, right? So I know exactly how the bond market, especially the 10-year yield in the US, evolved through the week. Then I'm also checking, of course, the forex market. So this is, for example, KGPY, the US dollar, okay, the DXY, and the gold. And I have the currency strength here, so I can better understand which currency was the strongest one and which was what the weakest one. So if we make a quick summary, the Canadian dollar, okay, purple one, the GBP, green, the Australian dollar, blue, the euro, red, and the US dollar, orange, are basically pretty bullish through the week. Upside momentum during the week. However, for the New Zealand dollar, pink, the CHF in yellow, and the Japanese yen in blue, it's bearish. So if we make a quick summary, right, it's very, very simple. We want to long those currency and we want to short this one. And now, this is the first part of my fundamental process. Then I'm also checking what we call the week ahead. It definitely helped me to know what are the big events for the week ahead, day by day. So I know that on Monday we'll get the Japanese gross domestic product, the GDP for Q2, right? We have some Chinese activity data, the Canadian inflation as well. It's gonna be definitely important for the Canadian dollar. On Tuesday, we have, for example, the UK job. On Wednesday, UK inflation, FOMC minute, blah, blah, blah. Okay, so I know exactly what to expect for the week. I'm also checking, of course, the event calendar. Very simple, but I want to know when the data is going to be published, okay? I want to get the time, but of course, the forecast. I have the forecast, and usually I also have the low and the high of the range. So I know that above this level is going to be strong, okay? And below, same. The impact will be bigger for the market. After that, I'm also checking what we call the bank's opinion. I don't want to copy the banks. It doesn't make sense. I'm not an institutional trader, okay? I'm not working for JP Morgan or whatever. However, as a retail trader, I can access, and you can access as well, to bank research to know exactly what the banks expect for the market. So this is, for example, the FX Weekly from MUFG, which is one of the biggest investment banks in the world. So you have the FX View, the trade IDs, especially the one on the IUD/JPY, we're going to talk about it just after, the EMM FX positioning, and the US macro risk monitor. You also have the performance. As you can see, for the Canadian dollar, this is the top one after the NOK, but the NOK is part of the G10. We mainly focus on the G8. So that's what Canadian dollar, top one, GB, IUD, Euro. If you compare, this is basically what we wrote earlier. This is both currency, okay? For the USD is not really strong, but still, okay. Then, as I said, they gave us a trade ID on IUD/JPY, but I don't want to copy blindly. I want to get the bias. Why they just recommending and execute a long on IUD/JPY? There is a reason, and the reason is just here. You just have to read. Everything is written, okay? They are talking about the intervention. IUD/JPY has since rebounded back up toward 113. We expect, okay, this is MUFG, we expect IUD/JPY to continue reversing the intervention in this decline, as there has not yet been a meaningful shift in the underlying fundamentals to support the sustained appreciation of the Japanese yen. They also talk about the Australian dollar, okay, the higher yielding G10 currencies, we know it, okay, especially for the Australian dollar, okay. And they also talk about the US economic data, okay? And the US yield. You remember the US yield, especially the 10-year? This is what we talk about just here with this bond market trading tool. Okay. So after that, after getting this bank's opinion, so this is a one from MUFG, but I can do the same with, Goldman Sachs, JP Morgan, MUFG again, or whatever, right? Crédit Agricole CIB. And after that, you want to determine the bias because you want to know which currency you should buy or sell. And for that, I'm using the Smart Bias Tracker. It's a trading tool that does everything for you. Inside, you have the bias for the fundamental data, the bias for the bank overview, hedge fund positioning, which is the COT, the retail positioning, which is the DMX, the monetary policy, okay, the trend and the seasonality. And at the end, you have the overall conclusion. So for example, for the US dollar at that time, it was weak bearish. So this is just an example. This is now the complete smart bias for every currency. So you have the one on the US dollar for this week, okay, this new trading week, okay, starting on the 16th of August. It's weak bearish for the US dollar, neutral for the euro, weak bullish for the GBP, the Canadian dollar and the Australian dollar, neutral for the New Zealand dollar, weak bearish for the Japanese yen, and bearish for the CHF. So for example, quick summary, okay, smart bias summary. You want to go long on GB, CAD, and AUD. Euro and NZD is neutral, okay? You don't have any clear bias. The USD, Japanese yen, and CHF is a sell for now. That's it. Very simple. So now you have a bias. Now let's mix both of them. This is a potential trade ID for now, just based on the fundamental part, right? So you have CAD-JPY, CAD-CHF, AUD-USD, AUD-JPY, AUD-CHF, NZD-USD, NZD-JPY, and NZD-CHF. The strongest short for now, for example, just based on the bias and the fundamental part, right, is probably USDK. Now, let's talk about the technical part. We talk about the fundamental, but we need to combine both because technical analysis is useful for execution. So this is just, again, the trade IDs we talked about earlier. But now we're going to talk about the technical chart. So this is, for example, the CAD-JPY long ID. You know that we have this bullish momentum. So going long on CAD-JPY could make sense again. For USD-CAD, we still have this bearish momentum. Shorting USD-CAD could make sense. So if we look the price action, okay, it's quite interesting now because we want to short if you have, let's say, a kind of pullback and boom. Okay, but it's not enough. This is just some basic technical analysis. For that, I'm also using two key elements. The first one, which is the bank forecast, and the second one, which is the bank trade. So this is, for example, the bank's forecast for the Q3, okay, for USD-CAD. We are talking about the FX bank forecast, institutional price projection. So you can definitely know what the big banks expect for USD-CAD for Q3. So for example, for the Crédit Agricole CIB is 137, 135 for ANZ, Citibank 143, they're well above all the ones, right? This is probably like the one of the top one, okay, close to the marks. And Nomura 137, HSBC 137, Barclays 136, JP Morgan 138. Now, if we make a quick comparison, most of them are below the current price spot. That's why most of them expect USD-CAD to be around this key level. For most of them, again, the average is here, okay? The max is here and the minimum is below, okay? So it means that shorting USD-CAD could make sense because we still have this bank's forecast, which is definitely quite bearish compared to the current spot price. Okay. Now you also have access to the bank trade. So this is some theoretical trade, okay? Especially this one from Refinitiv. This is a market execution on USD-CAD on the 25th of June. Okay, so 2 months ago. You have the entry, take profit, stop loss, and look, they execute the trade just here. They have the stop loss, and now the market just reached the take profit. It doesn't mean that you have to copy past, but this is definitely what I'm doing. I'm just checking if some banks recommend some trade and which one they definitely want to recommend regarding the current context. So for example, USD-CAD was still active until Friday because then the market definitely reached the take profit. Really, really good trade. So that's why I'm definitely combining the bank's forecast and bank trade to just go deeper compared to this basic technical analysis. So I know that, for example, shorting USD-CAD based on the fundamental makes sense. And from the technical analysis itself, it makes sense as well. Start to make sense. After that, I'm also using the supply and demand. So this is again, the supply and demand on USD-CAD. if you look, we definitely just break this key level, okay, the 140. This is a daily time frame. Now the price is basically dropping, and we're gonna reach the 138 level anytime soon if the bearish trend continue. Okay, again, depends on the fundamental. But if you look on the 1 hour time frame, we have as well the 139. So maybe shorting USDK around this key level could make sense. So from a technical analysis, start to make sense to identify this key level. Now we can also talk about the exponential moving average, what we call the EMA. But there is something important, because inside Prime Terminal again, we can select the different EMA. We don't want to choose the retail one. We don't really care about it. We want to select the institutional EMA, okay? This is really important. Now, if we check the EMA for USDK, as you can see, this is, yeah, let's see, pretty bearish again. The trend is definitely bearish. We have this bearish trend, and we have the 139. If, let's say, the price go up again close to the 139, which is definitely close to this EMA, maybe shorting USDK around this key level could make sense. Yeah, start to become quite interesting. But now let's talk about the order flow, especially the order book and position book. So we have two different tools, okay? First of all, the order book and then the position book for USDK again. To make it simple, for the order book, okay, we have heavy sell liquidity, okay? It's visible. And we have a large cluster of sell orders around 138.94 and 140. Well, perfect, because this is basically where the spot price is. So that's why shorting around this key level could make sense. But again, we are talking about order book, and order book is where orders are resting, okay? This is pending orders. For the position book, this is quite different because we have some trap long position and we have a large concentration of long currently sitting in loss below the entry. Yeah, it's visible, right? Again, we can identify this key level around this area. Okay, we have a lot of orders. So basically, shorting USDK around this key level could make sense because we have a lot of orders. And again, it's not a magic tool, okay? It will just allow you to better understand what are, let's say, the big areas and where the liquidity is sitting. But this is why we are combining the fundamental and the technical. And now I'm going to talk about something different, which is the context, because you always need to adapt to the context. And for that, you have 3 key rules. The first one is check the real-time headline ticker plus the market impact. Inside Prime Terminal, you can now understand the impact on the market. So let's take this headline, okay? USDJPY dips 17 pips lower, blah, 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 blah. Okay, boom. You have this bubble, you know exactly when this happened, and you have the movement after. So you know if it's something important for the market and if something changed, the direction changed or not. So you can better filter the noise and the impactful event. The second one is turn on the live market squawk. This is really important. The biggest trading desk in investment banking of hedge fund are using the live market squawk to get the information as soon as possible. You don't want any delay. You want to get the information as soon as possible. So you need to turn on the live market squawk. You just have to listen. Once the information drop, you can react fast. And the last one is the liquidity part. You need to check what we call the session range, especially if you trade the London and New York session. And this trading tool is pretty simple. This is, for example, the session range for AUD/USD. Okay, so you have AUD/USD here, and this orange box is what we call the Frankfurt to London flow range. Okay, so basically this is a range between Frankfurt and London, and this is where the institutional flow enter the market, because they need to enter the market, right? So that's why this range makes sense. And if you look closely, you can wait for a pullback and then execute based again on the fundamental, because if you look, we basically went down. The trend is bearish, but it's mainly because of fundamental. There is a driver to just push the Australian dollar down, right? It's not only based on technical part. If you combine both, start to make sense. And that's why you need to adapt to the session range and you need to adapt to the context in general. So now you have a plan. Start to make sense. You have the fundamental part, the technical, and the context. So you start with fundamental for the why, then you use technical for your entry, right? So you want to find the best entry, and then you just adapt to the context. The context change everything again. So you need to adapt to the context every day, every single day, at any time. This is the most important part, because if you have some trade ideas, maybe your ideas is not valid anymore. So you need to adapt to the context. Then if you want to trade like a professional, you need to use Prime Terminal for everything. And this is basically what I use. If you're an order flow trader, you can use the order book, position book, the footprint, the DOM, okay, the default market, the trade dot coming soon, whatever. You can also use the distribution statistic, okay, the FX cross rate, the supply and demand. If you want to go deeper in your fundamental analysis and especially macro data, you can also access the economic overview to analyze every macro data for every country in the world. You have access to real-time line, so the price chart, the technical part again. You can also create your own template. So you have, for example, the short-term interest rate for the Federal Reserve for the OES market, but you can do it for the future market. You have it as well. The COT positioning, the seasonality forecast, the DMX, okay, the bond market, same with the yield curve over there, the real-time line. You can check the information chart. Even if you do some long-term investment, you can check the balance sheet, what you want. If you're trader and looking to take your trading to the next level, this is definitely the only trading terminal you need if you want to take it to the next level. And for that, you now have access to a 7 days free trial with the link in the description. So it costs nothing if you want to understand why the market is moving and take your trading to the next level. This is definitely the best opportunity today. Just click on the link below, ask for your free trial, but this is only limited to 10 people, only 10, and that's it. So if you want to trade using Prime Terminal this week and see how it's working, this is definitely what you should consider right now after this video. And you need to act fast, because again, only 10 spot, it's Sunday, once it's gone, it's gone. So if you want to prepare your trading week without any cost and take your trading to the next level, to better understand why the gold is dropping, what's impacting the indices, the Forex market, to trade the option market, you have everything inside this trading terminal. So again, thank you for watching. If you have any question, feel free to ask. And again, if you want to take your trading to the next level, this is what you need. Prime Terminal is the solution.